Okay, good morning everybody. You're very welcome to this morning's webinar on auto-enrolment. We've already completed a sound check for a few of the attendees who logged in earlier. If you're using your computer, there you can increase the volume on your computer, or if you're using your phone device, most phone devices allow you to increase the volume. Just let me know if you're having any trouble hearing, but the majority of everybody came back already to say that the sound is working, so we're going to begin. So today's webinar will aim to make it easier for you to help your clients with their new auto-enrolment obligations and highlight methods to streamline the process. Our first speaker today is John, who is a director at Enroll My Staff, who specialise in helping accountants, HR consultants and financial advisors with their duties to automatically enrol their eligible employees into a workplace pension scheme. John has a number of qualifications, including pensions automatic enrolment, trustee pensions knowledge and the pensions regulator trustee toolkit certificate, DB and DC schemes. John is also a member of the PMI Automatic Enrolment Accredited CPD program. Today, John will present Auto Enrolment, Where Do You Start? Which is it's a good topic. Our second speaker today is Paul. Paul is the Managing Director here at BrightPay. He is also a Chartered Accountant, having previously spent 20 years in practice. Today, Paul will share with you his fairly unique insight into what auto-enrolment will mean for accountants and payroll bureaus, and share with you his thoughts on how to capitalise on this new business opportunity. Today, Paul will present Payroll Bureau's Guide to Profit from Auto-Enrolment. Now, throughout the webinar, you're quite welcome to type in any questions. So there on your control panel on the right-hand side, you should have a questions tab. So if you can type in any questions that you have, and at the end of the webinar, we'll have a 5 or 10 minute questions and answer section where we'll get through as many of the questions as possible. We're also recording today's webinar, so all of the questions and answers will be recorded, and we'll send it on to everybody afterwards. The good news today is, just to celebrate it being Monday, I suppose, we have a free competition. The competition is for 2 BrightPay Bureau 2015-16 licenses, and this is open to attendees who stay for the duration of today's webinar. So I'll now just pass you over to John. So if you just bear with us, we're just going to allow John to share with you his screen, and his PowerPoint will begin.
Good morning. I'm John Lepedvin from Enrol My Staff, a company established specifically to help employers prepare the way to comply with current pension legislation. My working life has been in the financial sector, the majority of which involves setting up group pensions and other employee benefit schemes for small and medium-sized businesses in the United Kingdom. Until October 2012, company pensions were a voluntary purchase. Employers didn't have to pay contributions, and neither did employees. Some recognised the benefit a pension scheme would bring to their business, particularly in attracting and, more importantly, retaining quality employees. That all changed with the Pensions Acts 2008 and 2011, which require all employers with 1 employee or more to provide access to a qualifying workplace pension scheme by a specified date, the staging date, and then to automatically enrol certain employees into that scheme. Failure to do so will result in sanctions being imposed by the pensions regulator, and we'll look at how disastrous that can be for a small business a little bit later on. We're more than 2.5 years into auto-enrolment, and more than half of the nation's eligible workforce have been auto-enrolled, but that only amounts to 1 in 25 employers. Yes, 96% of businesses have yet to meet their obligations, and they'll be predominantly small businesses with fewer than 50 employees, and, this is the key, they're unlikely to have any past experience of researching, installing and running a pension scheme, and almost certainly no knowledge of the pensions regulator, his methods or his powers. Does it affect you? I would assume the answer is yes, unless you go start looking at how to auto-enroll and find that it doesn't. But generally speaking, if you're an employer with one employee or more, it will affect you. It won't affect you if you employ fewer than one. That's none. Or you're a sole director with no employees, or you have only directors in your business with no contracts of employment. Those who are genuinely self-employed, and you have to be careful because some people who consider themselves to be self-employed can actually be deemed to be the employer of their host company. Equity partners with no employees and partners in limited liability partnerships are likely to be exempt, but of course if they employ staff, then as a business they will have to carry out their auto-enrollment duties. In recent years, there's been a rising awareness of auto-enrollment, particularly in the accountancy, bookkeeping, and payroll professions. Capable payroll systems are absolutely essential for success with auto-enrollment. And financial advisors have been slow to get involved. Small and micro businesses turn to their accountants and bookkeepers. Many times we've been told that the accountant is dealing with auto-enrollment. When we talk to the accountant, they haven't done a great deal. But they are less likely to offer complete auto-enrollment solutions. Auto-enrollment provides an opportunity for anyone advising businesses to increase the amount of contact time they have and to actually offer a much wider range of services to their existing clients, as well as perhaps attracting new clients if they say, yes, we get involved with auto-enrollment, rather than no, we don't. The whole system revolves around the pensions regulator, and they've been offering 1 hour, up to 1 hour webinars, presentations with up to sometimes 60 slides. And the thing employers and their advisors should remember is they know your staging date. They have the RTI returns from your payroll. They know what to expect because they set the framework for auto-enrollment. So they do know what you should be doing, and they will be monitoring the progress. So how do we start, which is the first theme of my talk today. How do we start? The first thing you need to do is look at your staging date. Now, you can go into your computer, go onto the Pensions Regulator's website, know your staging date, or just type into a search engine, find your staging date, click on here. Now, I'm going to use my own company's PAYE reference number, which is, and you will be able to see it, you can see I don't know it off by heart yet. There is a security code to make sure that I'm not a robot, and you can show the staging date. So my company's staging date is the 1st of August 2017, and from here, something people often miss, you can create a plan for automatic enrolments. By clicking that button, you then have a complete plan telling you what you need to do and by when you need to do it. Each of the stages has a little drop down. One of the first things you need to do is provide a point of contact, and that should typically be the chief executive of the business. A secondary contact might be the person dealing with auto-enrollments, either somebody in-house, perhaps in the accounts or HR department, or perhaps somebody outside. You just click on the button and you move to the next screen. You can go through this process without a letter code. You'll get a letter from the pensions regulator with a code on it, and that's the secret to success auto-enrollment. Every communication with the regulator needs that number. If you don't know your letter code, you can use your PAYE account office reference number here, and again, continue through the same process. Okay, so moving on. So what should you expect? Well, as intermediaries, whether it's payroll or accounts or bookkeeping or financial advisors, you might find that employers don't at first provide clean data. That doesn't mean anything inaccurate in the data, it means it may not be in the format that either the pension scheme or the payroll system needs to process the data for auto-enrolment. Every pension provider requires it in a different format. They have what they call an upload file or an input file in their own format, and most payroll systems seem to operate different ways, so you have an almost infinite number of combinations of payroll and pension schemes. So the first thing to do is get the data in the right format and make sure that the data is complete. It's worth considering centralization because having a payroll system that processes auto-enrolment with output files to your chosen pension scheme certainly makes life a great deal easier. And one of the messages from the pensions regulator is to learn from the experience of bigger businesses. They've been through this over the last 2.5 years, companies with large pensions and HR departments, and we can learn from them. I mentioned earlier the massive webinars from the regulator with up to 60 slides. You can see they're brightly coloured and full of animation. This is a typical slide from the regulator, and it tells you what you need to consider before you prepare for auto-enrolment. In particular, the software, the middleware. So will you be using your payroll software? BrightPay obviously has a very comprehensive auto-enrolment package, as do one or two others. And they connect to a number of pension schemes. Will you get another provider to deal with it? There is a possibility that your payroll software and your pension provider will issue communications to your employees, or be capable of doing so. It's also possible that neither will do that, and then you end up with a hole in the middle. That's where middleware comes in. It's a system that gets your payroll to talk to your pension provider. A little more cumbersome than having a payroll system or a pension system that does the work for you. So you need to consider how you're going to deal with that. You need to make sure that your staff data is up to date, and you need to make sure that the systems that you use work together. The regulator also wants to know who's responsible. There are HR issues because it's likely that pensions are not, certainly auto-enrolment pensions, are not accurately portrayed in contracts of employment. There will be possible payroll issues, maybe a little bit longer needed to process data. You need to make sure that your computer systems are up to date, and of course you need to look at forecasting, budgeting for the contributions and the cost of administration. So again, you need to look to make sure that all of the technology is capable of dealing with auto-enrolment before you start going down the auto-enrolment route and actually looking at what you need to do from a pensions point of view. How did we get here? Well, we had a problem with an aging population and a state pension system that was not going to be able to continue to pay the right level of pensions into the future. So we created a compulsory pension system and then made it unnecessarily complicated by giving people choices, offering opt-outs after the event, allowing you to postpone the date by which you auto-enroll people, but not the date by which you must comply. And the legislation also excludes many current schemes from meeting the qualifying status. And your software and your systems need to cope with all of those decisions along the way. Who does it apply to? It applies primarily to employees aged between 22 and state pension age earning between £10,000 a year and earning more than £10,000 a year. The qualifying earnings on which you make contributions will be the top band on the screen, 5,824 to 42,385, and the minimum contribution in 2018 will be 3% from the employer and 5% from employees. That is being phased in over the current period up to 2018. You have 3 other choices of pay you can use, and a business like ours will help you to decide which of those 4 definitions best suits your business. Your software, or your business must, and therefore you need software to do this, you must assess your workforce and categorize them by age and pay, issue the appropriate communications within defined timescales, and you must deal with those employees correctly, auto-enroll those who are eligible job holders, and make sure that all the other employees are notified of their options. And yet again, just a reminder, you can learn from the experiences of bigger businesses, which is well documented on the pension regulator's website. You can consider postponement. That means for up to 3 months from your staging date, you could defer making pension contributions, but I say again, you must be ready by your staging date. For new joiners after the staging date, you can defer for up to 3 months. This could coincide with a probationary period. You could just defer to align them with the first of the month, for people who join mid-month. And for people whose earnings are hovering around the triggers for auto-enrolment, when they hit the trigger, you may wish to postpone them. At the end of the postponement period, it may be that their salary has dropped back to, or their income's dropped below the threshold, and they don't need to be auto-enrolled. And of course, something often overlooked, you can pay more than the stipulated minimum, but you cannot pay less. How do you choose the right pension scheme? A qualifying workplace pension scheme could be a stakeholder pension, and many businesses have these already. It could be an occupational pension scheme administered under trust. It could be a master trust where an employer would apply for membership of the scheme, complete a participating deed, or deed of adherence as it's called, and become a participating employer in that scheme. You could go to a traditional insurance company and select a group personal pension plan for your employees. For smaller employers, I have to say that's becoming increasingly difficult as the pension companies have selected the larger firms and are struggling to justify the involvement in complex administration for small numbers. And finally, the National Employment Savings Trust, known as NEST, which you may have heard of. And NEST has a legal obligation to accept any employer, no matter how large or small, on the date that that employer has to meet its obligations. NEST is also the only scheme that has been specifically built for auto-enrolment. Things you mustn't do. You mustn't encourage your employees to opt out. You must certainly not offer any inducement, so you can't offer increased pay to your employees in exchange for opting out of the pension scheme. You can't offer jobs to people on the basis they've agreed to opt out of the pension. You can't try to make all of your employees self-employed. The decision whether they're self-employed or not ultimately rests with HMRC, who will decide on an individual status. And you can't pay less than the stipulated minimum. Just a point I have added here, there was a movement to completely boycott auto-enrolment from a group of small employers wondering what would happen. You cannot ignore auto-enrolment, and you'll see why in the next few slides. In fact, the very next slide will tell you why. If you fail to meet your duties, the regulator has in place a £400 fixed penalty if, after being informed of your failure and offered guidance, probably an enforcement notice stating you must complete your duties by a certain date, you're going to be fined £400. If you fail to follow that guidance, then there are escalating penalties. For micro businesses with 4 or fewer employees, that's £50 a day until the job is complete. If you have 5 to 49 employees, it's £500 a day, and if you have 50 or more, £2,500 per day until you have completed your duties. So there's no desire, I'm sure, to get anywhere near that side of the legislation. The best thing is to actually make sure that you are compliant in the first place. 5 common misconceptions. These came from feedback from employers, larger employers, earlier on in the auto-enrolment project. And it's worth remembering that you shouldn't assume that the chosen pension provider will do all of the work for you. Between the payroll provider's software, the pension provider, then the majority of the routine administration will be dealt with for you. Don't assume the payroll provider will tell you everything you need to do. They may do, and certainly there are some very comprehensive systems on the market like BrightPay, but some don't monitor the contributions, certainly don't issue communications. You have to be very careful with the payroll software to make sure that it provides everything that you need. The duties are yours. It's for the employer to comply with. Don't assume the work stops when enrolment has started. Actually, the processing needs to be repeated every payday, whether that's weekly, fortnightly, monthly, or whatever. And don't assume all staff must have a pension. It is strictly those between 22 and state pension age earning more than $10,000 a year that have to be auto-enrolled. But don't forget that all your other employees may well have pension options that they can choose, and you have to provide. And finally, please don't assume that most people opt out. The opt-out figures nationally are running at about 10% of the workforce at the moment. That may increase with smaller employers becoming online and auto-enrolling, but it is much, much lower than the government's original estimates of people opting out. If you would like a free 13 or 14-page report about your business to see exactly what you have to do, we designed the report so that employers could have a look at it and decide if they wanted to go their own way or if they would like help complying with the legislation. And please just send an email to info@enrolmystaff, and you can click on the link. You can click on the link on the dummy email here, and if you type in the subject heading "What do you need for my free report" and give us your PAYE reference number, we'll come back to you fairly quickly. It will show you exactly what you need to do. It will show you the sort of things that we can do for you. It will give you an idea of the cost of contributions, how many people need to be auto-enrolled, and when. And as I say, that's free of charge to help you decide how you want to go about it. So there we are. That's my look at how to get started and how to select a pension scheme. There is a link on the regulator's website, and I'll go back to that, with an 8-page booklet telling you how you can, how you need to select a scheme, and you can use the links in my presentation. You should be able to click straight on them and get straight through to the regulator's website. A quick guide to selecting a good quality scheme for automatic enrolment. It looks at making decisions on investments, and my advice, particularly to small employers who don't want to get involved in the cost of investment advice and making investment decisions on behalf of employees, would be to select a pension scheme where there's either an independent governance committee or independent trustees monitoring the investments. If the scheme is a qualifying workplace pension scheme, then it will meet the requirements of the pensions regulator, and you should have no concerns about using that scheme. So that's all from me for today. I apologise to those of you who may have listened in yesterday and found the sound quality wasn't very good. And if you have any questions, please send them either to BrightPay, or you can send them to info@enrolmystaff if you wish it specifically about Enroll My Staff, and we will answer those for you. Thank you very much.
Okay, thanks John for that. I'll now pass you over to Paul, and Paul is going to present Payroll Bureau's Guide to Profit from Auto-Enrolment. So thanks a million, John, and thanks, Paul.
Okay, thanks everyone. Thank you, John. And it's a pity the sound wasn't a bit better for everyone, because it's probably one of the most important things in these webinars. The sound is probably more important than the visual. But anyway, just to crack on anyway. Just a small bit about myself to start off. My background is as a practicing accountant. I started my own practice back in the 80s and eventually grew it to a 3-partner practice with 10 staff before doing something completely different and moving into software development full-time. While in practice, I provided payroll bureau services for about 30 clients, so I have some idea of what it is like on the front line. A large part of my motivation in getting into payroll software development was to make better software than what I was using at the time. Although I can't claim full credit for BrightPay, which is written by people younger and better than I. So far, the company has grown to 65,000 employers across the UK and Ireland, a figure that we are improving on every year. So here's the agenda for my slot today, which I hope you will find informative. When talking, I will probably refer to auto-enrollment or automatic enrollment simply as AE. Okay, first of all, AE is a vast subject, and some areas are highly complex. As you can see, John covered on a lot of the issues. It would take days, even weeks, to cover the subject properly. At the end of the day, you do not need to have an in-depth knowledge of AE. It is up to your pension provider and payroll software provider to filter out all the noise for you. So in short, AE is a government initiative to help more people save for later life through a pension scheme at work. AE is being rolled out in stages across all employers and started with the larger employers in October 2012. By October 2018, all employers will be required to offer workplace pension schemes to eligible workers. So you will see from the slide there that January 2016 is when small and micro employers start to stage in earnest. Small and micros have been included in the mix from the 1st of June, but they really start to kick in the 1st of January next. This is the start of the so-called tsunami, and things will definitely get very interesting from there on. A lot of the companies staging before now will probably have had their own HR people to help them through the process. The vast majority of those staging from January 2016 will have no in-house expertise and will more than likely turn to you for help. So you have a gift-wrapped business opportunity, and this is business you don't have to go chasing. Some Nest research, 91% of small employers and 85% of micro-employers are aware of the reforms. Only 18% of small and micro-employers feel they completely understand what it means for their business. 83% of employers yet to stage do not currently have an active scheme in place. And advisors say 50% of employers have turned to them very close to the staging date. Employees may look to you for help, not just employers. 25% of employees would opt to go to an independent financial advisor for guidance, compared to just 17% who would turn to their employer. Just a small aside here from the notes. I was in a meeting there recently with the pensions regulator, and it was interesting that a lot of their advice to date has been that you need to have your scheme in place probably at least 6 months before staging. Yet a little bit of an about turn where you feel that the company will have no employees to enroll. They're actually advising now that you don't have a pension scheme in place because it'll sort of create too much administrative work for the pension companies, that you can actually wait to see whether what may be existing non-eligible job holders become eligible job holders after staging. So it's just an interesting about turn with the guidance that's coming forward from the pensions regulator. Some more research statistics. 22% of accountants, 46% of IFAs, and 56% of payroll bureaus have finalized their AE proposition. 43% of accountants indicated they are offering services in conjunction with an IFA. Of that group, 73% are already working with an IFA to offer an AE solution, and a further 22% are planning to do so. According to the pensions regulator, over 1 million employers will be seeking help and advice on AE. Are you ready? Whether you're a bookkeeper, an independent financial advisor, or an accountant, you need to be prepared. If you have payroll clients, they may ask you about workplace pensions and what is involved for them and their business. We will now examine some simple strategies to get you started to help your clients comply with AE. Your client's staging date is set in law, and as the date their AE duties come into effect, they must be prepared for this date. An employer's staging date is determined by the number of persons in the largest PEY scheme that they use, based on data from HMRC held by the pensions regulator on the 1st of April 2012. The pensions regulator will write to all employers to confirm the staging date, but you can look up a client's staging date, as John showed you, by entering the reference of the largest PEY scheme into the staging date tool. When you know your client's staging dates, you can help them understand what they need to do for AE. You can work back from this date to plan what actions need to be made and when. And as John showed you, the Pensions Regulator website has a list of actions that you can carry out well in advance of the staging date. If employers don't comply, they face enforcement action in line with the Pension Regulator's risk-based approach. Enforcement action starts with statutory notices and is followed by penalty notices. Further non-compliance may result in court action. There are certain records that must be kept by law by both the employer and the pension scheme as proof of compliance. The records an employer must keep will enable them to prove that they have complied with their duties. Keeping accurate records also makes good business sense because it can help an employer to avoid or resolve potential disputes with employees, to help check or reconcile contributions made to the pension scheme. You must keep these records for a minimum of 6 years, except for records of opt-outs, which you must keep for 4 years. The Pensions Regulator recommends that you should create an action plan to give you plenty of time to prepare your client for AE. So 6 months before your staging date, employers should have checked which workers might need to be automatically enrolled into a pension scheme, chosen a pension scheme and confirmed that the pension provider will accept all your workers, ensure that your payroll system supports AE, and started to make your workers aware of AE. An important point to bear in mind is the matter of postponement. Some oral employees can be postponed for a period of 3 months. Many employers believe that they need to do nothing during this period. This is not the case. Communications must be sent to all affected employees within 6 weeks of the relevant staging date or the deferred date, or sorry, the actual staging date. Otherwise, postponement is null and void, and AE will need to be backdated, and that can be a huge problem. So just to be aware of that for your clients, that many of them are assuming that they actually need to do nothing in that 3-month postponement period. It's not the case. So it will be important to check with your payroll provider as to their readiness to handle AE. If it won't be ready, or the functionality isn't going to be made available in time, you may wish to consider an alternative software package that will integrate the required tasks into your payroll software. Will your client be using software to automate the majority of their processes? If yes, it is crucial that they hold accurate information about their staff, for example, personal and address information, dates of birth, etc., and the contributions that have been made on their behalf. Appropriate software will allow you to streamline AE processes and increase the profitability of payroll clients. Whether you are speaking to your existing payroll provider or selecting new payroll software, you should ask if the system can assess your workforce, allow the use of postponement, automate employee communications, calculate pension contributions, handle opt-ins and joining, handle opt-outs and refunds, notify you when actions need to be taken, keep records and provide reports, and integrate with pension providers. Having got the right software in place, you'll need to know how to use it before you get to your staging date. This means understanding what information you need to put in, how to configure it, what outputs the software will give, and how. You need to test your software ahead of your staging date to ensure you understand how it works, and to check that you know where to find all the information you need. It is crucial that you hold accurate information about your staff, their personal and address information, and the contributions that have been made on their behalf. Inaccurate records or missing data can have serious consequences, which can include staff being automatically enrolled at the wrong time, information about AE not getting to the staff member, and the wrong amount being paid to your staff to retirement. It is your responsibility to ensure that records are correct and up to date. So if you have payroll clients, there are 5 important things to consider. Firstly, engage with your clients. It will be important to engage with the small and micro employers that have not yet staged. These employers will be required by law to automatically enroll eligible eligible employees into a qualifying workplace pension scheme when they run their payroll on their staging dates, assuming that they are not using postponement. The first thing to do is to find out your client's staging date to start planning accordingly. It is possible to look up the staging date on the pension regulator's website if you have their PAYE information. Be aware that if you decide not to process AE, there will be a risk that you will lose some or all of your payroll clients. 2. Avoid penalties. The impact of AE will affect your clients' businesses now and for the foreseeable future. The pensions regulator continues to enforce fines and penalties for non-compliance. Not allowing enough time to plan could lead your clients to being fined, which they won't thank you for. AE penalties range from £50 to £10,000 depending on how many employees your client has. In 2014, the pensions regulator fined 169 employers for failing to comply. By planning ahead, it will allow you on behalf of your clients to avoid hefty penalty fines. Chargeable fees. By understanding employer AE obligations, a bureau can position themselves as an authority figure who is open for AE business. Employers outsource their payroll processes to you because you have the know-how and it saves them time and money. Today with AE, it is not only about cutting costs for employers, but trusting you as a payroll professional to make sure they are fully AE compliant. Furthermore, some employers may not have the competency, time or know-how to handle AE. Payroll software will play a vital role in ensuring the success of AE. Without the appropriate systems, bureaus will need additional time and resources to plan for AE. Payroll software can provide the necessary functions to automate the employer admin tasks. You will need to know which employees need to be automatically enrolled and which employees have the option to opt in. Payroll software can access employee pay and other information so as to establish who will be eligible, non-eligible or entitled. The regulator further urges bureaus and employers to check with their payroll provider to ensure that it will correctly identify the duty you have for each employee and to see if the system will support the requirements of AE. AE is presenting bureaus with a unique platform to increase profits. There are a huge number of small and micro employers due to stage between now and 2018. It would be important to capitalise on this window of opportunity. By offering AE as a chargeable service, bureaus can add additional revenue streams, provide value added to existing clients, and increase the possibility of bringing new clients on board. It further provides a competitive edge to you over other bureaus that refuse to provide AE as a service to their clients. Payroll software that can automate the employer admin tasks will be vital to improving profits. If AE is not already included with your current software provider as standard, you may have to pay additional costs for AE functionality and support. Bureaus obviously have the option to consider an alternative software package that has AE software included, AE features included, and no hidden support charges. Fortunately, modern innovative solutions exist that can automate the AE chores. Armed with the employer staging date, bureaus can now simply enter the date so that the system will assess each employee's eligibility for AE at the staging date. Good payroll software will further handle all employee AE communications based on each employee's individual eligibility. And now for a bit of shameless self-promotion. BrightPay is payroll and AE software which will enable bureaus to help their clients prepare for their staging dates. BrightPay is an all-encompassing solution that works to automate and simplify the AE process, making it as easy as possible for you to help your clients achieve compliance. With BrightPay you can benefit from unlimited employees, free phone and email support, unlimited employers, all for just £199 plus VAT per annum. You can also benefit from a 60-day free trial, which has no limitations to the functionality. So I'm just going to hand you over now to Rachel just for a 2-minute talk showing you how easy AE should be with correct software. In this example, we assume that the employer, or you on their behalf, has already registered with a pension provider, in this case Nest. Registering with Nest should take only 30 minutes on average to complete. Before passing off to Rachel, just to say to you, and I'm sure John will have some other opinions on this, I think that a lot of small employers will probably choose Nest because it is government backed and it has a mandate to accept all employers and employees, even the unprofitable ones, and has been preparing for a tsunami for the last few years. Having said that, BrightPay will also accommodate the People's Pension, Now Pensions, and many others, all of which are great schemes, and this list is constantly being added to. So, thank you, Rachel.
Thanks, Paul. Okay, so today we're going to have a look at companies set up in BrightPay who were set stage on the 1st of May 2015 and who are using Nest as their auto-enrollment pension provider. So as soon as your staging date is known, this must be entered in the Pensions tab and in the designated field provided. This is to ensure that on-screen auto-enrollment alerts will start up at the right time for you. Adding a pension scheme is also straightforward in BrightPay and can be done in advance of your staging date. Simply click Add New Scheme and choose the relevant pension provider from the listing. So you'll see here BrightPay currently caters for 9 pension providers and this list is constantly being added to. So here we're just going to choose Nest and you must now enter your employer reference and you'll receive this from the pension provider when you're registering. So just enter dummy one here. And in the next tab, enter your group name. I'm just going to say monthly. And here you can also edit the contribution types, the earnings basis, or add additional groups if required. Additional groups may be needed if you have employees on different pay schedules or with different contribution rates. So when ready, click Save down the bottom and you'll now see the Nest options appear up the top here. So if we go back to the payroll now and skip up to the staging date, in this instance the 1st of May, you'll see on-screen flags and alerts appear and these will notify you that you have auto-enrollment duties to perform. BrightPay will automatically assess whether employees are eligible job holders, non-eligible job holders or entitled workers. So if we click through to the options here, it says here Amy is an eligible job holder. So we have the option to enrol Amy in a qualifying scheme, postpone her for up to 3 months or mark her as exempt. So in this instance I'll enrol Amy. Simply select the scheme you wish to enrol her into, choose the tax relief and click continue. And BrightPay will automatically prepare the enrolment letter and this letter is ready for printing, exporting to PDF or emailing from directly within the software. If I click in here to print preview the letter, you'll see the letter is customized to the individual employee here and it will also give information about the staging date, her contribution rates, her option to opt out if she wishes to do so, and general information about auto-enrollment and how it affects the employee. So as soon as Amy receives the letter, you simply mark it as done. And you'll see here now the flag beside Amy's name has disappeared and that means our auto-enrollment duties for Amy have been completed. Carla here now is a non-eligible job holder, so if we click into the options we will have slightly different options. We have the option to print or export the right to opt-in letter. She has the option to opt in if she chooses to do so, postpone or mark as exempt. So again, the letter is ready for printing, exporting to PDF or emailing, and simply mark it as done again. Finally then, column is an entitled worker, so it's slightly different to that of Carla in that she has the option, the right to join rather than the right to opt in. So again, I'll just mark that as done there. A useful feature in BrightPay is the option to batch process more than one employee at the same time. So you'll see here Derek, I'll click in, and at the time of enrolling one employee, you'll have the option here to enroll multiple employees with these settings. So if I click in here and tick each of the eligible job holders and click Enroll Selected Employees, BrightPay again will automatically prepare the enrolment letter for each of these, which can be batch printed, batch exported to PDF or batch emailed. Again, once each of these receive it, we'll mark it as done. BrightPay can also handle postponement, so I'll just postpone Janice here. Simply click postpone, enter the deferral date. I'm just going to postpone for 1 month, but you can choose any date up to 3 months. And again, postponement can be done in batch. So I'll just postpone the 2 of those there. And again, BrightPay will prepare the postponement letter, which will have all the details marked as done again. See now each of the flags have disappeared, which means your staging date duties have been completed. So you must now send the enrolment and contribution files to the pension provider. And BrightPay can handle this for supported pension providers, which are these 9 pension providers here. So simply click the enrolment file, click next, and fill in the payment source. I'll just copy this to each of these here.
Can I just say, Rachel, as well, just one thing that just when you show the pension providers that we currently cater for, there's an upgrade going out shortly that will also handle Simply pensions. Yes, and we do upgrades regularly to add to the number of pension providers that we cater for.
Yeah, so continuing on, you simply save the file to a location of your choice, and you must then upload it to the pension provider's web portal. So Nest have recently announced an API where it'll be done directly from within the software, but that should be included by the end of the year. Again, the contribution file. Sorry, I forgot. I'll go back here. I forgot to finalize the payslips. I'll just show you here as well when I go in to print the payslips. It'll show the employee contributions on the payslip itself here. So I'll go back now and do the contribution file. Again, it's much like doing the enrolment file. You choose the payment source, the payment due date, simply click along and save the file to a location of your choice. Again, this needs to be uploaded to the pension provider's web portal. If an employee decides they want to opt out, then you'll see here in the Employees tab, each employee has an auto-enrollment heading. So if we click in here and Amy has decided to opt out, you will receive an opt-out reference from the pension provider. So I'll just enter a dummy one here. And there Amy has opted out. So if we go back to the payroll now and go on to the next pay period, Amy has received a refund of the pension contributions made to date. And you'll also see here that the flags have reappeared for Janice and Scott, and this is because they had been postponed for 1 month. So BrightPay is continually assessing each employee at each pay period in case anyone needs auto-enrollment duties. So again here, I'll just mark these as done. 2 of those. And that's it, done there. And if you require any auto-enrollment reports, this can be found in the analysis bar. Simply click New Report, enter the period, the employees, and the columns. I'll just click in here to the columns. I'll select none of these. And in the period tab, we'll just see the auto-enrollment headings here. We'll choose a category, enrollment date, just all the different auto-enrollment headings there. And if we go into employer items, you'll also receive the contribution rates. So just tick each of the next ones here. Run report, and you'll see here this is the report done up. It'll have the worker categories and all the different totals of the contributions. So if we go back to the pensions tab here, within 5 months of your staging date, you have to complete a declaration of compliance. So once you've this filled out, you can simply enter the date in here for your own record that it has been completed. Again, some of the pension providers will carry out the communications for you. So to turn off the communications reminders in the software, you can simply untick these boxes here and select Save Changes. So that completes the demo for today. If anyone would like a more in-depth demo or a demo for your staff, feel free to contact us and we can arrange this. So I'll now pass you back to Paul.
Okay, thanks, Rachel. And just in relation to that demo that we can do for your staff or yourself, we use sort of an online tool called Join Me. So the effect that, when we do the demo, you're looking at our screen and you can ask us questions, specific to, anything that you are unclear about really can be covered in that demo. Just another matter that I was thinking about when Rachel was doing the demo there is APIs. Nest have already issued an API specification which we are working on at the moment, and it won't be going live with Nest themselves anyway until towards the end of the year. So that will be part of BrightPay as well. Any of the other schemes that are bringing out APIs, we are monitoring. We know that the likes of the pensions regulator, I think they're going to be doing their API. They're going to be using System Sync API, and again, we intend to include the System Sync specification within BrightPay when that comes out. Another thing just to mention as well in relation to what Rachel was showing you there is that she was showing you the work that was involved in the staging. And really the staging is probably the most time-consuming part of auto-enrollment. Is when all the main work occurs. Afterwards, though, it's okay. It doesn't stop there, but afterwards it's a lot less intensive, in that really all you're doing is monitoring, say, staff to see whether they become eligible job holders because of their income going over certain thresholds, or reaching the age of 22, or new staff members. But for most small companies, I mean, the number of AE events that need to be addressed each year could be just one or two. And also, obviously, the ongoing responsibilities also includes sending pension contribution files to the pension provider and such like. So just to get back to my own bit of the presentation, so just bear with me a second. Okay, so just really just some takeaways that just to consider. Okay, first of all, automation. By automating the AE tasks, bureaus can reduce overheads per client, increase staff efficiency, and increase bureau profits. Functionality. Ensure your solution has everything you need to prepare your clients for AE. And hidden costs. Check to see if there are any hidden charges when it comes to the number of employees, employers, and the level of support that is provided with your chosen payroll software solution. And communications. Be proactive by educating and communicating directly with your clients about what is involved for them and what you can do for them. Okay, so I think probably at this stage we're probably going to deal with questions and answers. And is it just myself, or is John?
Well, I just think because of the quality of John's audio, I might just pass the questions that come through for John, and we'll include them in the follow-up email that we sent to everybody afterwards. It was just, there's just a good few people came through and saying that the quality of the sound wasn't great. So we'll take a list of those questions. I just think that's the best thing to do because, due to the quality. So there is a good few questions here.
Okay, I'm just noticing a couple of the questions here. And I'm sorry that I use these terms like API, assuming everybody knows. No, obviously, like I'm involved in software, and API is something we use every day, and I forget that a lot of people don't understand what it means. Basically, just in a nutshell, APIs, automated programming interface or whatever. It's a bit like RTI, where when you're submitting an RTI return, it's really just a button you're pressing in the software, and the software deals directly with, say, the government gateway or the HMRC. In relation to pensions, an API would be where you can click a button within the software and the information goes directly to the pension provider. At the moment, what you need to do is you need to basically create a file, save it to your desktop or whatever, then log into the pension provider's web portal and find that file and upload it to them. So it's a little bit time consuming. An API basically enables you just to do one click of a button to basically streamline that process.
Okay. So it's great. It's a good few questions coming through here. I wrote a couple of them down earlier on. Do any other payroll providers have the APIs included?
Well, the APIs have only just been released, and the specifications themselves, and Nest aren't yet ready to actually accept APIs. They're only really in the testing stage. So I'm unaware of any other payroll providers that will have an API active at this stage.
Yeah, I haven't come across any either. I know Nest, we're working with a couple of the payroll software companies, including ourselves. So, you know, once it becomes available, we'll set it up on BrightPay, and I'm sure the other payroll providers will follow suit. Okay, the question there, does BrightPay provide support to accountants for them to send initial communications to clients so clients can make their staff aware of what is involved with auto-enrolment?
Okay, no, we don't actually provide that particular communication. I mean, it's really, you know, I suppose it's a matter for each accountancy firm or bureau to decide what level of AE service they can provide for that client. I mean, the best thing to do is probably to sit down with the client for maybe a free half-hour consultation or whatever, and to go through with that client, you know, what you can do for them, so that they'll actually probably get a good understanding of how much is actually involved in it as well. I know we previously referred to sort of like a 4-tier sort of process, which maybe we can include in some of the notes that we send out to the attendees. But yeah, no, we don't actually provide guidance on the actual communication from the bureau to the client. It's just the letter, the actual statutory letters that go from the client to the employees that we actually have built into the software.
Yeah, I think there's a lot of posters, kind of design templates that you can download from the pensions regulator. And
yeah, I'm not actually sure how much they actually cover the actual bureau client relationship, but yeah, they probably do have some guidance there.
Okay, if emailing letters, can you include the employer's email address?
Oh, so that the employer receives a copy, I presume, like a CC?
Yeah,
that can be done, yeah.
Yeah, you can put in the employee's email address, and then you can also put in a CC where you can include the employer's details.
Yeah, so at least the employer will have a log or a record that the email went out at a certain time to a certain employee, yes.
Okay. There's just somebody looking there for clarification of John's email address, so we'll include that in our follow-up email as well. Okay, I'm trying to read a couple of these out here. When a client registers as an employer after 2018, how long do they have before they need to have auto-enrolment in place?
That's a good question. I believe that after 2018, you're straight into it. In other words, like there's no to be no more thing or such thing as a staging date after that time, because staging will have already happened for everyone, and basically you're fully into it really from day one.
Yeah.
As far as I'm concerned, I can clarify that maybe.
Okay. So do you have a webinar on how to use BrightPay auto-enrolment? I think that question is, do you have a webinar on how to fully use the auto-enrolment functionality with BrightPay? So as Rachel said there earlier on, like that was a very, very quick demonstration that we went through, but we can set up a one-to-one webinar where we can go through the auto-enrolment functionality, and you know, we'll go through it in a little bit more detail, but it's also an opportunity for you to ask questions, and it's all done online through a webinar, and it's a live webinar, so you know, you can have yourself or any of your colleagues can be set up there on it as well, so you can watch it at the same time. So we can organise that for you, and likewise we'll include that information in the follow-up email, where we'll just as well to clarify, we'll also send a recording of this video to everybody along with the PowerPoint presentation, and then hopefully we'll get John on board for recording his section again, and I just apologise again for the quality of the audio. Okay, so there I think, yeah, Paul just quickly covered there Pricing, how would you price auto-enrollment, which is the $20 million question?
Yeah, it's how long is a piece of string. And
Yeah.
like, I know I came across one customer who is an accountant who mentioned to me in passing that he had a 15-employee client who had staged, and he charged the client, I think, £400 for staging, which included the, setting up with a pension scheme. Staging for that accountant took less than an hour, actually, and that included the time taken to register, I think, with Nest in that particular case. Charging £400 for that, and I think he upped his payroll fees from £1 per pay slip to £1.50 per pay slip for the ongoing duties of sending in the pension files and such like. And actually the client, I think, was quite happy with that. But I mean, it really is. It's a matter of personal preference.
Yeah, it is. I suppose it's very hard to price. Myself, I've come across a kind of a tiering system, and I've heard this from a lot of our existing customers, and then also a lot of forums that I would follow on Accounting Web. So, they'd have, say, tier 1, 2, and 3. So tier 1 might just be the auto-enrollment setup where you look after the assessment part of it and, setting up the pension scheme in your payroll. And then tier 2 might be the auto-enrollment setup plus, for example, the communications. Tier 3 might be setup, communications, and then the ongoing duties per month. And then there would be different prices dependent on how many employees are in your client's company. So, maybe you could price based on a company 1 to 10 employees could be X amount, 1 to 20 employees could be another amount. So I haven't come across anybody of actually putting up their prices, making it available or sharing it, but I suppose,
so it's one to keep close to their chest. But I think in most cases, even when you present clients with the option of all these different tiers, they tend to go for the full Monty, so to speak. They want the accountant to look after everything for them.
Yeah, and I suppose if you have it in a tier system, you can introduce, what exactly is involved in auto-enrollment, the assessment, the communications, the option to postpone, opt-in, etc. And that will, I suppose, communicate to your payroll clients exactly what is involved in auto-enrollment. And it is, I suppose, complicated if you don't have the right payroll tools in place to automate all of those things. Because you have to take into account the amount of hours that you're spending on auto-enrollment and then the cost of your payroll software.
Another just another quick one. One of the themes I've come across as well is that they're saying a lot of their clients don't want to refuse to pay or wouldn't be able to afford to pay for the additional cost of auto-enrollment. But at the end of the day, look, it's not your fault that auto-enrollment has come in, and it is an extra responsibility. There is extra work involved, and you need to be covered for that.
Okay. So there's a question there, is there any plans for integration with Xero? At the moment we don't have any plans, I suppose, but I know Xero aren't there yet in terms of their auto-enrollment functionality, and I'm not sure who they're talking to in the market, but they have a payroll software solution, but yeah, they're not there at all in terms of their auto-enrollment.
I suppose in the very short term, no, we don't have any plans for integration there, but it's something that we will be looking at in the future.
And do you provide any example templates, etc., for accountants to market this solution to clients?
No, that was in the previous question as well. We don't really know.
No.
But I suppose that 4-tier pricing thing you were talking about might actually be a good idea to send out with this PowerPoint.
Okay. How important is it to nominate a contact person? One client's deadline is the 1st of August 2015. Who ideally should be the contact person?
It's really whoever is looking after, who is responsible for, the administration of auto-enrollment. I suppose the payroll bureau themselves would be the ideal contact person in that case.
Yeah. I suppose it would be the opportunity for you to get auto-enrollment as a service that you provide to your clients. So, if you can contact your payroll clients and offer to be that contact person, and you look after auto-enrollment, and then, once you get your pricing plan in place, you can tell the client the price will be X, Y, and Z, and it'll be an opportunity for you to engage with your client about providing auto-enrollment as a chargeable service.
Okay. Choose the tax relief.
So what do you mean choose the tax relief?
Yeah, I think that was probably part of what was shown on the screens during Rachel's demo. Typically, the default really is that the tax relief will be provided at source, so that say the employer is contributing £1, the employee is contributing £1. That employee's contribution would basically be 80 pence from the employee, and 20 pence would be coming from the exchequer. That is the default situation where somebody has no NI number. It would typically be a gross contribution. And in some cases, I think employees can arrange with the pension provider, particularly where they are on high marginal rate, that they're actually receiving the relief through their annual tax return, and there's no tax relief source in that case.
Okay. Do sole directors have to physically opt out of auto-enrollment?
So, okay, that's a good question, because it's something that's really only been clarified to myself in the last few weeks, actually. Sole director companies are obviously exempt from the auto-enrollment duties. They were basically what are considered to be not employers for auto-enrollment purposes, and there is a link on the pension regulator's website to actually inform the pensions regulator that you are not an employer for the purpose of auto-enrollment, and that basically stops the clock in terms of future communications or them expecting a declaration of compliance or such like. So yeah, there is a way of actually informing the pensions regulator that you are not part of auto-enrollment. I think maybe we include that link. I know I did a blog on it there a few weeks ago, so even if you go to the BrightPay.co.uk website and just go to click blogs at the top, and you'll see one of the
we'll include it. We'll include it for everybody. Is the $199 per annum BrightPay fee for unlimited number of payroll clients?
Yes.
Yes. Unlimited employers and unlimited employees for the accountants or the bureau license, and there's free support included in that as well. And auto-enrollment is free. We don't charge extra for the auto-enrollment functionality. Is it possible to use BrightPay to assess employees' eligibility more than a month before the staging date?
Yes, I think Vicky showed that, didn't she, in a previous demonstration. I suppose we can answer that in what we follow up with. Mm-hmm. But yeah, I believe there is a way of doing it. Yeah, you can run a report, as far as I know. I don't know if Vicky works here at the in BrightPay. And she found a way of doing that. So
yeah, you can do it before the staging date. It's a new feature that we've just added to BrightPay, so you can get an idea of the work categories for your employer.
There's an answer. How do you inform HMRC that you have no employees eligible? I think it's important to sort of just clarify that the HMRC really have nothing to do with auto-enrollment. It's the pensions regulator. And if there's no employees eligible, it's the same just before there a while back that it was director only. There is a way of opting out in total from auto-enrollment. But if you have no employees eligible, I'm assuming there that where it's just non-eligible job holders or eligible job holders have opted out. I'm actually not fully sure what the question relates to.
Okay, so maybe if you could just reply to us on the email, because there's quite a lot of questions coming through here, so maybe you're answering us down below. The question there, can I speak on the phone today to ask a few questions? No, unfortunately, we've over 200 people on this webinar, so we wouldn't be possible.
They could ring afterwards.
Yeah, exactly. Yeah, all of the contact details will be there. Is the total cost of BrightPay inclusive of auto-enrollment? Yeah, so I covered that already, so there's no additional cost for the auto-enrolment. Do BrightPay provide the service for employer to choose the right pension scheme for them?
No, we don't. No. We don't actually get involved in pension scheme selection. And again, it's a good example to use the services of companies such as Enrolment staff to do that. Because it provides a full service really for the client.
Okay. Does the employee have access to their contributions record through BrightPay or through the pensions provider?
Yeah. Well, okay. I know Nest provides an online portal for the employee. Like the employee themselves will have login details, so they can go in and view their contributions to date, how the investment is performing and such like, and they can also choose to change the risk profile of the investment. So yeah, I mean, that sort of thing I know is available within Nest, and I'm presuming it's available within the likes of the People's Pension, now pensions.
Yeah, the contributions will be on their payslip as well.
Well, yeah, but I suppose that'll only be the years year to date.
Okay.
Take your payroll year.
Yeah. Okay. Thank you, Paul, and all at BrightPay for the informative webinar. You're very welcome. Okay. Is there any plans to put BrightPay on the cloud?
Okay. Yes. But it will always be optional. Like BrightPay is a desktop product as it stands at the moment, but we do plan to have a situation where you can actually upload your data or your employer file to a cloud platform so that it is available for use on your iPad, your iPhone, or whatever, plus the likes of employee self-service. But what we have found is that a lot of people kind of shy away, that they don't want it to be a full cloud program because for one reason or another they might fear security or availability or a good internet connection or whatever. So we are planning to make it a dual thing, that you'll always have the desktop solution available, but you'll also have the cloud there as an option.
Okay. Is the fee for BrightPay a one-off annual fee, or do you provide a monthly subscription model?
It's basically an annual fee. It's too low a fee really to actually do it on a monthly basis.
Yeah, absolutely. So yeah, no, it's a $199 plus VAT for the bureau license on an annual basis. Do you have bookkeeping software to accompany your payroll software?
No. So what's this one there?
No, sorry. This one here?
Yeah.
Sorry. So what if there are 2 directors but only one is on the payroll? Is the company exempt?
Okay, the 2 directors, well, if neither of them have contracts of employment or sometimes you can have an inferred contract of employment, but if neither of them have inferred contracts of employment, well, then the company is exempt. There's actually, I think it's a webinar, or so there's notes or webinars available on the Pensions Regulator website to do with this. Is an upcoming webinar on it, or do they already have one?
Is it on Thursday? Oh, I know I've registered for it. Go into the Pensions Regulator there. They do a lot of webinars, and I think they either had one last week or this week. I know I put it into my Google Calendar, which I
think just to answer that question, more than likely it is exempt. If in doubt, sometimes it's just as well to go ahead with auto-enrollment and then to opt out. At least then you know you're covered.
Yeah, I think there is a new web page on the Pensions Regulator that specifically covers it. So just go on there. Can BrightPay import data from Sage?
Yes, we have various help sheets and videos and things on how to bring in your data from Sage and other payroll providers. Basically, it involves exporting to a CSV file from the other provider, then importing into BrightPay.
Yeah, we can again, we can show you that on the demo. Like we have a lot of people, which is great for us, moving over from like Irish Sage and MoneySoft, and you can import your mid-year totals as well. But that will be covered in the demo, so that's an opportunity, I suppose, to ask one-to-one questions. So if a sole director company is exempt, how do we inform the pensions regulator when circumstances change? That is, when the company employs staff.
Yeah, good question. Yeah, that is something you do have to do. If you do kind of tell the pensions regulator that you're not part of auto-enrollment because you're officially not an employer, as soon as those circumstances change, you are obliged to inform the pensions regulator immediately. As to the actual mechanism of doing that, I'm not sure. I just saw that they had on the pension regulator website that you have to inform them. So I'm not exactly sure how that's done.
Okay. It would be useful to do a webinar on how to use BrightPay for auto-enrollment.
Other than a one-to-one.
Yeah.
Yeah, good point.
Yeah. Well, we actually have done one there a few months ago. So over the next few months, we will be doing a lot more webinars, where we'll go into a little bit more depth on BrightPay. But I suppose we wanted to get off. We wanted to go through this guide on how to increase revenue from auto-enrollment. So we're rolling out a lot more webinars on various subjects. And yeah, no, thanks for the feedback. We're always interested in what content people are interested in. So if you're on you'll be on our database now because you registered for this webinar. So we'll be inviting people to future webinars. So I think we're going to leave it there. We've kind of run way over on time. So the questions that we didn't get to, we'll answer those and get back to people.
I suppose we will send them out globally as well. That all attendees will receive the answers to the questions we haven't covered there today.
Yeah, exactly. So thanks to John. Again, apologies that the sound quality wasn't good, but I'll touch base with John afterwards to see if we can record it and just improve on that audio for everybody, and we'll include his contact details. And thanks to Paul and thanks to Rachel for the demo. So have a good week, everybody. Thanks a million, and we'll send on the winners as well with the follow-up email. Thanks a million.
Thank you.